Good evening, VV Nation. My name is Ryan. Welcome to the channel. Happy Wednesday. Now, tonight's presentation, the rally is still intact. Our proprietary market timing system, the DEW, and confirm call are still in preliminary up signals. And on top of that, primary wave still in an up situation. The primary waves are fastest moving market timing signals. So if there's any, trouble for the bulls, that's going to be the first thing to go down. And it's still flashing up today. I see the major indices slightly in positive territory. So tonight's presentation, I want to put two hot industries on your radar. These are the two hottest industries in the VectorVest 7 system and showing the most momentum to the upside. We have electrical connectors and we have steel alloy. So tonight's presentation, we're going to jump right into the VectorVest 7 system, analyze the top stocks in these industries, and see if there's any potential for profits. Now, if this is something that you're interested in, stick around and let's get started. All right, we're in the VectorVest 7 software. If you're not a member, you're not a subscriber, have access to the software, just go to vectorvest.com/YT. You get a 30-day trial. Now, that being said, look, we have over 222 industries we're currently tracking throughout the broad market. Over 9,000 stocks, right? So out of all of these industries, these here are the top 5. We got steel alloy at the top, electrical connectors. Other than that, it's all ETFs. We got industrials, technology, currency, other. This is going to be your Bitcoin, things of that nature. So we're going to start off with steel alloy. It's got the most momentum to the upside. The reason why these are here, right? RT, relative timing. This is a proprietary indicator looking at the momentum of the trend, right? The short-term price trend of these industries. They're on a 0 to 2 scale. Above 1 is favorable. Below 1 is unfavorable, right? See all the ratings? Way above 1 here. So not only are these in an uptrend, but they're showing a lot of magnitude to the upside with that trend. So let's jump in and see if there's any money to be had with some of these positions. Now in this industry, there's not many stocks. We've got CRS, ATI, mtus, mtus, and GSM. One thing I do like, look, all of these stocks are showing positive momentum even to today. If we take a look at the valuation here, some of these stocks are overvalued. We have Carpenter Tech coming in at 246. We value it at 211. That just means that investors are willing to pay a premium. This is not a price target. ATI, look, overvalued. Metalis, undervalued. Ferroglobe, overvalued at 380 compared to 360. We'll say fairly valued. It's not far from our valuation. But that being said, the two stocks at the top of the list, they are trading overvalued. So just keep that in mind. If we look at long-term price appreciation, which is the RV here, favorable ratings for the two top stocks. RS, relative safety, not much safety in this industry as a whole, but the Carpenter Tech does lead the charge here at 1.36. RT, relative timing, that's what it's all about with this one. Momentum. Carpenter Tech 1.84, ATI 1.94, thus bringing the overall value, safety, and timing ratings all in positive territory for this industry. Buy ratings here, if we look at sales growth rate and growth rate in earnings, which is GRT, the top two showing positive results here, double digits in some of these categories. However, the bottom two negative in some of these categories. So that being said, just with this information in hand, staying towards the top of the list here is getting you better overall attributes with these individual positions. So let's go ahead and jump in the charts and see if there's any opportunities presenting themselves in the near future. Here we're taking a look at the first chart being ATI. Again, this is in the steel alloy industry. The green line here, we show our valuation of the company. Stock price represented by the candlesticks. Down below, we have RT, relative timing, just giving us a sense if the short-term price trend is in the favor of the bulls or not. And then below that, we do have forecasted earnings per share. Now, ideally, you just want to see the stock lower left, upper right, preferably undervalued, but we see this company was undervalued for a good portion of the year. However, the last rally or this momentum bringing us to a new 12-month high has caused the stock to become overvalued. So therefore, investors are willing to pay for a premium. But look at RT relative timing. This lets us know that the short-term price trend is still in the favor of the bulls. And with a full-body candlestick as of right now and a brand new high, doesn't show that the stock is losing a lot of momentum at this time. In addition to that, if we look at the earnings per share, exactly what we want to see here. Nice stair-step fashion from lower left, upper right. Here we have CRS. We see price action always coming in at a premium right above our valuation. Last time price action met our valuation here. The bulls took charge, felt like they were getting a good deal, bringing the stock to a brand new high at $246. Relative timing and favorable territory here coming at 1.83, showing momentum for the bulls. And again, look at the earnings per share on the rise. So you see exactly why this industry is hot right now. Now here's a position a little bit more dangerous, but you might get some bang for your buck here. Price action on the decline over the last 12 months. We see the low came in back in April, but the price is undervalued right now. We value the company at $14.06, currently trading at $14.11. So now it's fairly valued with the upside price action over the last few trading sessions. However, the earnings per share has been on the decline, bringing our RT in positive territory. However, earnings per share also on the decline over the last year here. This I could see more as a momentum play going forward, but with falling earnings per share, not the best candidate for a long-term position. Here's the stock at the bottom of the list. You see price action on the decline over the last 12 months, bringing the stock into undervalued territory for quite some time. However, look at valuation, also on the decline now. If I go into a 6-month time span, we can see value on the decline, price action on the decline, forecasted earnings per share on the decline. Wouldn't waste too much time here, but hey, with the RT relative timing in positive territory, and honestly, you just draw a nice trend line here. As long as price action stays above this trend line with a nice pivot, if we can get some follow through or take out today's upper wick in this candlestick, showing that the bulls are still in control, this might just be a position to put on your radar. Now we're looking at the connectors in the electrical sector here. We've got APH, SITM, MEI, IEH Corp, and Prysmian. If we take a look at the valuation here, we can see most of these stocks here are overvalued. Actually, there's only two of these stocks are undervalued currently. IEHC trading at $9.50. We value the stock at $11.43. You can also find some value here with 65, slightly undervalued. We currently value the company at $67. As far as long-term price appreciation and RS, our fundamental indicators, pretty mixed, but overall you can see not the most favorable ratings here. Pretty risky in nature, this industry in general, except the top stock here coming in at 1.32 on the RS rating. But look, again, momentum is in this space here. RT, the lowest one in the batch, comes in at 1.28. And if we look at forecasted data, a lot of double digits here. Only one stock showing negative growth rate in earnings and sales growth rate. That's going to be MEI. But with buy ratings across the board in this industry, let's go ahead and take a look at the chart. Now, this company showed a lot of consolidation. However, breaking out above that, you can see I've taken a look at the stock here before, had a level of resistance. Now support, obviously, around $73, $72. Been off to the races. Momentum is here. Brand new 12-month high. But look at valuation. Even though the stock is overvalued, I like to see value rising with the price action here over the last 12 months. RT relative timing in favorable territory, and earnings per share on the rise over the last 12 months. Definitely have the stock on your radar. Here we've got SITM. You can see valuation kind of flatlined here. Not as much enthusiasm as the stock before. And we're coming up on a prior swing high. So if you're looking for confirmation on this position here, it's going to be right around $212 from the prior swing high. So if you're not already in this position, if you want some confirmation, definitely get above 212.37. RT relative timing taking back up. If I zoom into a 3-month time span, we can see a nice little pivot here, but taking out the prior swing high. So I do like the momentum continuing here. But ultimately, we're in a channel right now, right? So let price action, let the trade come to you. Don't rush the trade. Wait for a break on either end of this consolidation. And if you're thinking of more of a long-term position here, if I take a look at the EPS or earnings per share, nice steady rise over the last 12 months. But we can see this little dip here starting to recover a little bit. But overall, the forecasted earnings per share is on the rise over the last 12 months. That's something I definitely want to see. Now, here's MEI. I'll be honest here, value on the decline, price action on the decline. The stock was undervalued, but look, valuation is still on the decline here. A nice bit of momentum from the low, now ending at 826, both earnings per share on the decline. Can't get too excited about this position. Now here's IEHC. You can see a lack of volume here with these candlesticks, but look at the valuation. Nice steady rise over the last year with valuation here, coming in at $11.43. Stock only trading at $9.50. RT relative timing also in positive territory. Now the earnings per share comes in at 0.24. It was negative, but now negative earnings has become positive on a forecasted standpoint, giving some enthusiasm to the bulls. Now here's the last stock, PRYMF, trading at $65. Very low volume, just like the last position here. Stock is undervalued. We see a nice pivot here. However, finding some rejection right at the prior swing high around $67. I'd like to see price action get above $67 for confirmation here. But we do have a fresh buy rating. And my only other concern really is just the falling earnings per share and the falling value. So the fundamentally not there. I see this more as a technical play just because RT relative timing continuing to climb over the last several weeks here. Bulls are in charge. So again, low volume, just putting that warning out here. Now, after reviewing these two industries, there's definitely a couple stocks that showed some, some positive attributes here to possibly make some money in the market. Now, if you found this video informative, make sure you hit that like button. If you're new to the channel, subscribe so that way we can keep you updated going forward. Now, everybody have a good night, and I'll see you tomorrow evening.